Welcome back to the Open. The TSX coming off some softness in yesterday's trading session, but the last couple of months have been positive. That's helped increase the year-to-date return to nearly 6%. Now, keep in mind, the S&P 500 has had a much stronger showing this year. A lot of that has to do with the outperformance of tech. Not that we don't have tech stars, so to speak, in Canada this year, but the underperformance of energy and materials and financials, one of the reasons we have lagged the U.S. markets. We're back with Diana Abigdor, portfolio manager and head of trading at Barometer Capital Management. Do you think that trend starts to change?
I hope so. I think that it's undervalued. Certainly financials in Canada are in good shape. Dividend yields are high, obviously, because they've sold down a bit. So I think from the perspective of the investor, it's not a bad investment at this point. Valuations are about one standard deviation below where the average is, and they're well capitalized. They've been proactive in taking care of whatever debt issues they might have going forward by, approaching their clients and walking through what they need to do. Loan growth might be a little slower, but they're really in good shape. So we like them, and we've had them for a little while. We've added to some of the banks like TD when their purchase of First Horizon did not go through. They're now very well capitalized and very nice yields.
So have you been?
we have been.
TD?
Yeah. And also exposure to some diversified financials like Power Corp, for example. Also sports a pretty decent dividend yield, diversified and with good markets, and their exposure to insurance that is also pretty attractive to us. So now the breadth in the commodity sector has been expanding. In other words, stocks have been starting to participate. So, and oil has gone from 75 to where it is today.
That's what I wanted to talk to you about.
Yeah.
I mean, we did just have the best percentage month for crude since Russia's invasion of Ukraine. So that got WTI back above $80 a barrel. But I think a lot of investors who watch BNN Bloomberg heard about the bullish calls and the reasons to look at the energy companies and likely felt some frustration why everybody kept gobbling up tech stocks this year.
Absolutely. So, the commodity price is very volatile. And it moves around, and thankfully it's off the bottom. But companies, like especially the larger companies, like let's say CNQ, which by way of disclosure we own and we added. These are companies that are now working on their financial balance sheet. They're buying back stock.
We're showing Canadian Natural Resources here. This is an example
CNQ,
of one you've been buying?
Yeah, this is the one we've just recently exposed ourselves to. They're buying back stock. They have a dividend. They're paying down debt. Paying down debt is a theme, or should be a theme in your portfolio, given where rates are. So paying down debt is important, and it's diversified, and it's large, and it's liquid, and you can get in and out should something not work out. But yes, this is an exposure that we've added to.
Okay.